Based on the historical data and forecast, Bitcoin has shown significant volatility but appears to be stabilizing within a range. The RSI has consistently fluctuated, dipping into oversold territory on several occasions, particularly around December 16, 2025, at 36.8, suggesting potential buying opportunities. The Bollinger Bands indicate periods of contraction and expansion, with the recent narrowing suggesting a potential breakout. The forecast prices remain relatively stable around $88,000 to $88,600, indicating a sideways trend in the short term. I recommend a strategy that combines RSI and Bollinger Band signals to capitalize on short-term fluctuations. My recommended strategy involves a layered approach. First, initiate a long position at $88,400 when the price touches the lower band, setting a stop loss at $87,800 to mitigate downside risk. A first target price would be $88,600, coinciding with the upper Bollinger Band. If the price reaches this target, consider taking partial profits and moving the stop loss to the entry price, $88,400. If the price continues to rise, a second target price would be $88,800. If the RSI drops below 20, which it hasn't yet, consider a short position at $88,400, with a stop loss at $88,600 and a target price of $88,200. This layered approach allows for flexibility and profit-taking as the price fluctuates, while the stop-loss orders protect against significant losses. Based on the historical data and forecast, Ethereum has shown a downtrend from December 9, 2025, to December 22, 2025, with the price fluctuating within a support of $2,830 and a resistance of $3,000. The RSI has been consistently below 60, indicating a lack of strong bullish momentum. The forecast for the next week suggests continued sideways movement around $3,000. Considering the downtrend and the RSI readings, I recommend a short selling strategy. We will enter a short position when the price reaches $2,980, placing a stop loss at $3,010 to limit potential losses. The initial target price will be $2,960, aiming to capture a quick profit from the current downward pressure. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, which is around $3,320, it signals a potential shorting opportunity. However, given the current downtrend, we will wait for a pullback to $2,980 before entering the short position. If the price drops to the lower Bollinger Band, around $2,750, it indicates an oversold condition, and we should consider covering our short position or moving our stop loss lower. The final portfolio will be a combination of these strategies, prioritizing the short selling strategy with adjustments based on the Bollinger Bands and RSI signals. We will enter a short position at $2,980, set a stop loss at $3,010, and target $2,960. Based on the historical data and forecast, BNB shows a fluctuating trend with support at $831 and resistance at $882. The RSI consistently hovers around the mid-range, occasionally dipping below 40, indicating potential oversold conditions. The Bollinger Bands suggest periods of volatility, with prices frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy focusing on short-term opportunities. We will implement a buy strategy when the RSI falls below 40, indicating an oversold condition. The entry price will be $850, with a stop loss set at $831, aligning with the established support level. The target price will be $882, corresponding to the resistance level. To maximize returns, we will also incorporate Bollinger Bands analysis. When the price touches the bottom band, which is currently $831, we will enter a long position. The stop loss will be set just below the lower band at $824, and the target price will be the middle band at $877. This combined strategy aims to capitalize on both RSI signals and Bollinger Band breakouts, providing a balanced approach to managing risk and maximizing potential gains. The portfolio will prioritize the RSI strategy with a 60% allocation and the Bollinger Band strategy with a 40% allocation. Based on the historical data and forecast, XRP has been trending downwards with consistent support at $1.9. The RSI consistently dips below 50, indicating a weakening momentum. The forecast predicts a continuation of this downward trend, with prices hovering around $1.85 to $1.91. We will implement a short selling strategy. Our entry price will be $1.91, capitalizing on the predicted dip. A stop loss will be set at $1.95 to protect against unexpected upward movements, and a target price of $1.8 will be set to capture a significant profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which could be a good entry point for a short position. However, given the prevailing downward trend, we'll stick with the initial short selling strategy. The portfolio will prioritize this short selling strategy with a 70% allocation, given its alignment with the overall trend and forecast. The remaining 30% will be held in cash to manage risk and potentially capitalize on any unexpected market shifts. This approach balances risk and reward, aiming for high returns while protecting against significant losses. Based on the historical data and forecast, Solana shows a downtrend with increasing volatility. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week predicts a continuation of this downtrend, with prices hovering around $125 to $123. Considering the support level at $119, a short position strategy is recommended. We will enter a short position at $125, with a stop loss placed slightly above the recent high of $126 to protect against unexpected upward movements. The initial target price will be the support level at $119, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential bounce, but given the overall downtrend, we'll maintain the short position. If the price reaches $122, which is within the forecast range and near the lower Bollinger Band, we'll consider tightening the stop loss to $124. The final target price will be $117, providing a buffer against potential reversals. This portfolio combines the RSI and Bollinger Band signals to optimize risk-reward, aiming for a high-return investment with a clearly defined exit strategy. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations around the $0.28 mark. The RSI values have been oscillating between 33.3 and 59.6, indicating periods of oversold and overbought conditions. The Bollinger Bands have remained relatively stable, with the price generally trading within the bands. Considering the recent RSI values nearing the oversold level and the forecast predicting prices around $0.283 to $0.281, a strategic long position can be initiated. We will enter a long position at $0.281, setting a stop loss at $0.272, just below the lower Bollinger Band to mitigate potential losses. The initial target price will be $0.29, aligning with the upper Bollinger Band and a reasonable profit margin. To further refine the strategy, we will incorporate RSI signals. If the RSI falls below 20, indicating a strong oversold condition, we will enter a long position at $0.274, with a stop loss at $0.265 and a target price of $0.288. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider a short position. However, given the current upward trend and the forecast, we will focus on long positions. This combined strategy, utilizing both Bollinger Bands and RSI, offers a balanced approach to capitalize on TRON's potential while managing risk effectively. The final portfolio will prioritize long positions with dynamic adjustments based on RSI signals and Bollinger Band levels. Based on the historical data and forecast, Dogecoin exhibits a downtrend, consistently testing the 0.13 support level. The RSI consistently remains below 50, indicating a bearish sentiment, and has been fluctuating between 31.6 and 46.8, suggesting potential oversold and overbought conditions. The Bollinger Bands have been narrowing, indicating decreasing volatility and a potential for a breakout. Considering the forecast for the next week, the price is expected to hover around 0.13, reinforcing the downtrend. I propose a short selling strategy targeting the resistance level of $0.139. The entry price will be $0.139, placing a stop-loss order at $0.143 to limit potential losses if the price rebounds. The target price will be $0.13, aligning with the established support level and the forecast. This strategy leverages the anticipated downtrend and the consistent testing of the support level. The RSI readings suggest potential opportunities to enter when the asset is slightly overbought, while the Bollinger Bands indicate a potential for a downward breakout. This combination of technical indicators and price action provides a robust framework for a high return, albeit moderately risky, investment strategy. Based on the historical data and forecast, Cardano shows a downtrend, with the price consistently below the Bollinger Band center and approaching the support level of $0.351. The RSI consistently fluctuates below 50, indicating weakening momentum. The forecast for the next week suggests continued downward pressure, with prices hovering around $0.35. Therefore, I recommend a short position strategy. Entry price will be $0.374, placing a stop-loss order at $0.369, just above the recent low. The initial target price will be $0.358, aiming to capture a significant portion of the anticipated decline. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, consider a partial cover at $0.356. If the price touches the support level of $0.351, and the lower Bollinger Band confirms the downtrend, we can tighten the stop-loss to $0.356 and set a second target price at $0.354. However, if the price breaks above the upper Bollinger Band, indicating a potential reversal, immediately close the short position and re-evaluate the trend. This layered approach, combining trend analysis, RSI signals, and Bollinger Band confirmations, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a generally upward trend with recent volatility. The support price is consistently at $480, while the resistance has fluctuated but recently approached $598. The RSI indicates periods of both oversold and overbought conditions, with recent values trending upwards. The Bollinger Bands have been widening, suggesting increased volatility. Considering this, I recommend a long position strategy. We will enter a long position at $588. The stop loss will be set at $537 to protect against a significant downturn. The initial target price will be $604, aiming to capture a portion of the predicted upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, indicating an oversold condition, we'll consider averaging down by adding to our position at $550 with a stop-loss adjusted to $537. If the price touches the lower Bollinger Band, we will enter a long position at $514 with a stop-loss at $480. If the price reaches the upper Bollinger Band, we will take partial profits at $608. The final target price will be $604, maximizing profit while managing risk. This portfolio combines trend following with contrarian signals for enhanced returns. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend, consistently testing the support price of $3,070. The RSI has been fluctuating below 50, indicating weakening momentum. The Bollinger Bands show that the price has recently been near the lower band, suggesting a potential oversold condition. The forecast for the next week indicates a slight upward movement, but overall remains within a narrow range around $3,220 to $3,270. Considering this, I recommend a long position strategy when the RSI reaches an oversold level below 20. Specifically, enter a long position at $3,210, set a stop-loss at $3,070, and target a price of $3,260. This strategy aims to capitalize on a potential bounce from the oversold condition and the support level. To refine the strategy, I will incorporate the Bollinger Bands. If the price touches the lower band and the RSI is below 20, it strengthens the case for a long entry. If the price starts to move towards the upper band, consider taking partial profits at $3,240. The final target price remains at $3,260, aligning with the resistance level. This combined RSI and Bollinger Band strategy offers a balance between identifying oversold conditions and confirming potential trend reversals, with clear entry, stop loss, and target levels to manage risk and maximize potential returns. Based on the historical data and forecast, Hedera exhibits a downtrend with increasing volatility. The support price remains consistently at $0.105, while the resistance fluctuates around $0.114. The RSI has been predominantly below 50, indicating bearish momentum, and recently dipped into oversold territory below 30, suggesting a potential short-term bounce. The Bollinger Bands show a narrowing range, which often precedes a breakout. The forecast indicates a continuation of the downtrend, with prices hovering around $0.108 to $0.113. Considering these factors, I recommend a contrarian strategy capitalizing on potential short-term rebounds while managing downside risk. My recommended strategy is a partial long position with an entry price of $0.113. Given the oversold RSI and the potential for a bounce, this entry aims to capture a short-term upward movement. A stop loss should be placed at $0.108, just below the forecasted price floor and below the recent lows, to limit potential losses if the downtrend continues. The target price for this trade is $0.118, aligning with the recent resistance level. This strategy is designed to capture a quick profit from a potential bounce while protecting against further downside. This position should represent no more than 20% of your portfolio due to the inherent risks associated with short-term trading and the overall bearish outlook. Based on the historical data and forecast, Injective demonstrates a clear downtrend. The price has been consistently declining from December 9, 2025, to December 22, 2025, and the forecast for December 23, 2025, to December 29, 2025, suggests a continuation of this trend. The RSI consistently remains below 50, indicating a bearish momentum, with several days dipping below 30, signaling an oversold condition. The Bollinger Bands also support this view, with the price consistently trading near the lower band. Therefore, a short selling strategy is recommended. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal results. The entry price will be $4.46, coinciding with the forecast price on December 24, 2025, and a test of the support level. A stop loss will be placed at $4.63, just above the recent resistance, to limit potential losses. The initial target price will be $4.38, aligning with the forecast price on December 25, 2025, and December 26, 2025. If the price reaches $4.38, we will move the stop loss to the entry price of $4.46 to secure profits and potentially ride the downtrend further. This strategy aims to capitalize on the prevailing bearish trend while managing risk effectively. Based on the historical data and forecast, Gnosis has been in a downtrend, with a recent bounce from the support level of $113. The RSI is currently at 48.9, indicating slightly oversold conditions, but not significantly so. The forecast for the next week suggests a period of consolidation around $121 to $122. The Bollinger Bands show the price nearing the lower band, indicating potential for a short-term bounce. Considering these factors, I recommend a long position entry at $121 with a stop loss at $119 to protect against a further decline. A reasonable target price would be $125, aiming to capture a portion of the anticipated bounce. To maximize returns, I propose a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. The primary strategy is a long position at $121, with a stop loss at $119 and a target price of $125. If the RSI drops below 30, indicating a strong oversold condition, we will consider adding to the position at $116, with a stop loss at $113 and a target price of $121. Conversely, if the price breaks above the resistance level of $128, we will close the existing position and reevaluate the market trend. This blended approach aims to capitalize on short-term bounces while mitigating downside risk and adapting to changing market conditions. Based on the historical data and forecast, DoubleZero is exhibiting a downtrend with increasing volatility. The price has consistently traded within a range between $0.102 and $0.117, with recent price action indicating a bias towards the lower end of this range. The RSI consistently hovers below 50, indicating a lack of strong bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price swings. Given this analysis, I recommend a short-term contrarian strategy focused on capitalizing on potential short-term bounces while maintaining a bearish outlook. My proposed strategy involves a two-pronged approach. First, when the RSI reaches an oversold level below 30, enter a long position at $0.105. Set a stop loss at $0.102, just below the established support level. Place a target price at $0.109, aiming to capture a quick profit from a potential bounce. Second, when the price touches the lower Bollinger Band, enter a long position at $0.104. Set a stop loss at $0.102 and a target price at $0.106. This strategy combines RSI and Bollinger Band signals to maximize the probability of success. I would allocate 60% of the portfolio to the RSI strategy and 40% to the Bollinger Band strategy to reflect the stronger signal from the RSI. Based on the historical data and forecast, Avalanche has been in a downtrend from December 9, 2025, to December 22, 2025, with the price fluctuating around the support level of $12.3. The RSI consistently remained below 50, indicating a weakening momentum. The forecast for December 23, 2025, to December 29, 2025, suggests continued sideways movement around $12. Given this scenario, I recommend a contrarian strategy capitalizing on potential short-term bounces. I propose a buy position at $11.8, placing a stop loss at $11.4 to limit potential losses. The initial target price should be $12.4, aiming to capture a quick profit from a potential rebound. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band around $11.5, it suggests a potential oversold condition, increasing the probability of a bounce. Therefore, a buy order at $11.5 with a stop loss at $11.2 and a target price of $12.4 would be a more precise entry point. This combined strategy leverages both RSI and Bollinger Bands, offering a balance between trend confirmation and potential reversal opportunities. The portfolio will allocate 60% to the buy position at $11.5 and 40% to the buy position at $11.8. Based on the historical data and forecast, PancakeSwap shows a downward trend. The price has been consistently trading within the lower Bollinger Bands, indicating increasing selling pressure. The RSI readings have been consistently below 35, confirming an oversold condition. Considering these factors, I recommend a long position strategy with a focus on capitalizing on potential rebounds while managing risk. The forecast data indicates a continuation of the downward trend, with prices expected to reach $1.75. Therefore, the entry price should be set at $1.83, coinciding with a slight bounce from the support level of $1.79. The stop loss should be placed just below the support level at $1.77 to protect against further downside risk. The target price for this trade should be $1.88, aiming to capture a short-term recovery. The strategy combines RSI and Bollinger Band signals with support and resistance levels. The RSI being oversold suggests a potential bounce, while the lower Bollinger Band confirms the downward trend. This combined approach allows for a balanced strategy with a defined entry, stop loss, and target. The portfolio will allocate 60% to this long strategy, 30% to a short strategy targeting $1.77, and 10% to a neutral strategy. This diversified approach mitigates risk and maximizes potential returns. Based on the historical data and forecast, Aptos exhibits a clear downtrend. The price has been consistently declining from December 9, 2025, and the forecast for the next week indicates a continuation of this downward trajectory, potentially reaching $1.45. The RSI consistently remains below 30, indicating oversold conditions, but without a significant reversal. The Bollinger Bands show that the price is approaching the lower band, suggesting further downside potential. Therefore, I recommend a short position strategy. Enter a short position at $1.64, placing a stop-loss order at $1.57, just above the support level. The initial target price should be $1.45, aligning with the forecast low. To refine the strategy, I propose a tiered approach. If the price reaches $1.45 and the RSI shows signs of approaching oversold levels again, consider extending the target price to $1.41. This strategy leverages the downtrend, utilizes the support and resistance levels for risk management, and incorporates the RSI and Bollinger Bands to identify optimal entry and exit points. This portfolio aims for high returns by capitalizing on the predicted downward movement of Aptos. Based on the historical data and forecast, PAX Gold exhibits a clear uptrend. The price has consistently moved upward from $42.10 to a forecast of $4,810. The RSI values have generally been above 50, indicating bullish momentum, with recent readings exceeding 80, suggesting a potential overbought condition. The Bollinger Bands have been widening, reflecting increased volatility and price movement. Considering these factors, I recommend a long position strategy. The entry price for this long position should be $4,480, coinciding with the first forecast price. Given the recent overbought RSI reading, a conservative stop-loss should be placed at $4,400, just below the lower Bollinger Band. The initial target price should be $4,650, aligning with the forecast price for December 26, 2025. If the price continues to rise, a second target price can be set at $4,810, the final forecast price. This strategy combines trend following, RSI considerations, and Bollinger Band support for a balanced approach to maximizing returns while managing risk. Based on the historical data and forecast, the graph shows a downtrend. The price has been consistently below the Bollinger Band center line, indicating a bearish momentum. The RSI consistently remains below 50, further supporting the downtrend. The forecast data projects a continuation of this downward trend, with prices hovering around $0.0351 to $0.0369. Considering the support level at $0.0357, I recommend a short position with an entry price of $0.0369. Place a stop-loss order at $0.0381, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. Set a target price at $0.0357, aligning with the established support level, aiming for a conservative profit. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 20, signaling an oversold condition, consider covering the short position or initiating a long position with an entry price of $0.0351. Conversely, if the price touches the bottom of the Bollinger Bands and the RSI is below 30, it suggests a potential bounce. In this scenario, a short position with an entry price of $0.0365, a stop-loss at $0.0374, and a target at $0.0355 could be considered. The most efficient portfolio combines the downtrend strategy with opportunistic RSI and Bollinger Band signals, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Curve DAO shows a downtrend with recent price fluctuations. The RSI consistently stayed below 60, indicating a lack of strong bullish momentum. The forecast for the next week predicts a stable price around $0.36, suggesting a continuation of the current sideways trend. Given the support price of $0.339 and the recent trading range, I recommend a long position strategy with a conservative approach. Entry price will be $0.364, with a stop-loss set at $0.339 to protect against a potential breakdown of the support level. The target price is $0.382, aligning with the resistance level, aiming for a modest profit. To refine the strategy, we will incorporate the Bollinger Bands. The price has been oscillating within the bands, and a potential buy signal arises when the price touches the lower band and the RSI is below 30. Currently, the lower band is around $0.333 and RSI is 35.1, so we will wait for the RSI to reach below 30. Therefore, the refined strategy is to enter a long position at $0.362 when RSI falls below 30, with a stop loss at $0.339 and a target price of $0.382. This approach combines trend analysis, support and resistance levels, and the Bollinger Bands indicator for enhanced risk management and potential profit maximization.